Welcome to today's Daily Report market analysis videos with me, Richard Perry, market analyst at Hantec. On Thursday, the 2nd of July, we've got a developing, more positive outlook that we're seeing through markets at the moment. Just seen that in the last couple of 2 or 3 sessions, actually, we've seen Wall Street climbing back higher again. It's sort of backed away from the test of that key breakout support. Futures a little bit higher again today in front of payrolls. And it just seems as though that the markets are sort of taking a little bit more risk positive angle on this thing as the dollar starts to falter away again. What we saw yesterday was the Fed minutes, which were broadly positive, actually. I think supportive for markets, dovish in their lean, I think, because the fact that the Fed started talking about yield curve control, that's tends to be seen as a dovish move, dollar negative, but also how the Fed will be sort of erring towards a forward guidance based on outcomes of inflation rather than any time-specific moves. So subsequently, if inflation doesn't pick up, well, you're not going to see any change in inflation. In monetary policy. So subsequently, I think that also sort of maintains this low level for the for Treasury yields. Also, the dollar suffering on the back of that, and risk positive as well. So markets pulling high. You can see that through European indices, all pretty strong today. Futures for US around about 0.7% higher on S&P 500 futures, the E-minis contracts, and generally speaking, pretty decent, I think, in terms of risk appetite today. This all comes ahead of Nonfarm Payrolls report, which is today on a Thursday, or this week on a Thursday, because of the Independence Day public holiday that the US is celebrating tomorrow, although it's the 3rd of July. But that means that payrolls report is being released today, and the expectation is for 3 million jobs growth in the month of June. That's a big number. That would actually be a record, but it obviously is higher than the 2.5 million jobs created in May, but this is on the backdrop of what was an incredibly April was had that 20.6 million jobs lost in April. So it doesn't really touch the size of that yet, does it? So will be interesting to see how the market really reacts to this payrolls report today, because obviously the US is now going back into sort of across 12 states, they're rolling back lockdown easing measures and possibly even sort of reinstating them. So it'd be interesting to see what July brings, but certainly today we could see a decent number, 3 million jobs growth. But look at the spread, sort of 400,000 up to 9 million. So once more, the analyst community doesn't really know what to make of this. So that's also coming in along with unemployment levels. Let's get that back a little bit. Unemployment is expected to improve to 12.3, obviously with 3 million jobs added back in. That is a percent on unemployment improving. And also the average hourly earnings growth or decline of 0.7% negative, pulling earnings growth back to 5.3%. Still the statistical anomaly that is earnings, given the fact that 20 million jobs or 20 odd million jobs were lost in April, many of which service sector, many of which sort of low paid service sector is the reason why earnings growth is so high, because that statistically distorts the number. Also, we're looking out for factory orders. Where is it? There you go. Factory orders, 8.9% growth in May. Down, again, sort of clawing back from 13% decline in April, but still that is in May. Rebound there. Now, my chart of the day is Aussie yen. We talk a lot about risk appetite, and Aussie yen improving again in the last week or so. This uptrend has been running. It's corrected back to that support of the uptrend. The sort of correction back on Aussie yen started to come as fears over renewed second wave problems around the world. That fear is still there, and I think how it progresses in the US is going to be key in the coming weeks. as to whether the market sort of takes it as a US only basis or as a broad appetite or a broad impact that would be negative on risk. But at the moment we see Aussie yen picking up, and that tends to be seen as a positive for risk. And as I said on earlier other markets, we've got that sort of risk positive bias starting to come through, and that is sort of reflected through Aussie yen. Not decisive yet. Now you'd want to see a breakout, I think, on a closing basis above 74.50 to really suggest the market is sort of gaining traction again. But already we're seeing the stochastics positive. RSI just backed away from 60. You'd want the RSI above 60 into the low 60s at least as well to confirm that move above 74.50. But it certainly looks as though this is a market that's trying to regain some upside initiative, just needs that final push. Perhaps payrolls report would give it some impetus today. Yeah, we just need to see the sort of push through 74.50 confirmed would be above 75.05, which was this reaction high here from mid-June. And then you can start thinking about 76.75 again. But obviously we need to see that through the 74.50, I think, to really suggest that the recovery is open. But you can see here on the hourly chart, higher lows, higher highs, more positive configuration on an hourly RSI, and MACD lines holding above neutral. It looks as though the market wants to buy this into weakness now. It just needs that final push. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.